Good day, traders and investors. Welcome to the new update at the Road to El Dorado, which is going to cover a few potential opportunities which can take place in the following week between the 4th of December and the 8th of December 2023. Let's get it going. First, let us give a check to what happened to the four opportunities we discussed last week, starting from the one on the USD JPY. What we had was a formation of a triangle, which was also encountering different forms of resistances. We showed the chart on this candle right over here. What happened after that, the price went a bit up, then produced an effective breakout to the downside. Since this point, you can notice that the price did a huge drop equivalent to 273 pips or about 1.83%. This movement went straight to the point. Next on our list is the Euro GBP. Over there we were observing a falling wedge chart pattern. When we showed the update, the price was forming this red candle over here, and what we discussed was that for an entry it was necessary for the price to go up and close above the resistance of the falling wedge, but also above this general uptrend support line of the bigger channel. You can notice that this never happened and this setup didn't provide an entry. Instead, the price kept on dropping lower. We did mention that over here there was a strong support range, and that if the price was to break it, then the general trend could reverse. You can notice that as the price kept on falling and over here it crossed it effectively, soon after it was followed from a huge drop. Next one, we have the rising wedge on NZD USD. This one also never produced an entry. For an entry to have been produced, we needed a drop and a close below this rising wedge. Instead, the price kept on fluctuating up from this candle over here and then broke above it. Finally, from last week, we had the symmetrical triangle that we discussed on the UK 100. Now, the time in which we discussed it, we had this green candle followed by this red candle during last weekend. Back there, we did mention that this might end up being a false breakout and that you may want to wait for a retest and a bounce to the upside to confirm that the price can indeed go up. Now, what followed was a bit confusing. The price dropped down, tested it, couldn't break above it, and then instead broke to the downside. This could have been taken as an entry for a sell trade, and indeed the price did fall much lower. It went about halfway down to the targets just above the first strong support range that the price could encounter. After that, however, the price still reversed, went up, and went much higher. In those circumstances, if you had a small take profit, you could have made some money. If you had a larger take profit, but you figured out that in those circumstances you needed a positive stop loss, this reversal could have still closed your trade on a minor profit or a break even. But if you didn't play the card with the positive stop loss, then this trade could have went on a negative for you. For the following week, we're going to discuss three promising setups starting from the AUD JPY. Now over here we have a few things. The first one is, if we look in this region over here between those two orange lines, the price is forming a possible ascending triangle. Just to give you an idea, when you're having an ascending triangle, what you need is the movement leading into the formation to be an increase. This one we have over here. And then you also need a breakout above the resistance. This indicates a possible movement to the upside. Now, this ascending triangle is not the only thing that we have over here. The red line that you see going across the chart is a 100 period simple moving average. You can notice that the price touched it over here and bounced up, then a bit before the market closed, touched it over here and started bouncing to the upside. Additionally, if you look from the point down over here, the price of AUD JPY has been moving in a very obvious uptrend market structure. You have higher highs and higher lows. Now here we need to point out a couple of important things. The first one is the previous major high that you have right over here from this level. And the next one is the previous major low, which is down from this region right over here. Those levels are important for a couple of reasons. First, if the price goes up and closes above the previous major high, this can be taken as an extra confirmation for an increase, but also if the price goes down and closes below the previous major low, this can invalidate the whole structure that we are discussing here. Finally, this triangle over here is a continuation of a much larger technical formation. You can notice that over here, since June, the price has been forming this huge cup and handle chart pattern. You can see the cup over here, reaching back to the level from where it started. Then you had another drop forming the candle, and the price closing above this key line of the cup and handle was an indication of the pattern giving a possible increase tendency. What happened since then? The price has been fluctuating up and down above and below the key line of the cup and handle. In the process, it's been making higher lows, which is promising, but still, to get the most certainty in this technical picture for a further increase, you need the price to close above those levels. Finally, this green line that you see is actually a very strong resistance that was formed back in September 2022. If the price goes up and closes above all of those levels, it's also going to go higher than this previous major high, which can give you more certainty for this possible increase. Following the logic of this cup and handle, the possible movement to the upside is equivalent to the distance between the key line and the low points in the cup. This is about 480 pips. So, measuring the same thing from the breakout of the handle over here, this gives us a target around 102.40. This next chart over here is on the AUD CHF, and what we're having is a formation of an inverse head and shoulders. First shoulder, head, second shoulder. You can notice that the price already broke out of it. Since then it retested it once and has been fluctuating up and down. Now, even though this pattern is already giving its indication, there are a couple of things that you need to consider. First thing, you need to know that the head of this pattern bounced up from a strong uptrend support line. We also have conditions to go ahead and draw an uptrend resistance lines, which is going through the high points like this. This indicates that the price can continue moving in this general uptrend channel. Now, zooming back in the current formation, you can notice that as we stretch a Fibonacci from this previous major high down to the low point of this inverse head and shoulders, the price right now is fluctuating in the region between 0.382 and 0.5. To get some more certainty of this potential reversal, you may need to wait for the price to go up and close above the 0.5, but also above this height it made over here around 0.5807. Also, here you need to take in consideration the 100 period simple moving average and the 200 period simple moving average. You can notice that the price started encountering them over here on this 1 hour chart. If the price starts bouncing down from them, then this can invalidate the whole pattern. If, however, soon the price goes up and closes above those two moving averages, as well as above the 0.5 Fibonacci, this can end up being a very good confirmation that the price can continue to the upside. Finally, there's a couple of indicators that I want you to track if the price starts going up, so that you can be aware when it may start dropping down again. The first one is the RSI. Currently the RSI is about 54, which is okay. It has a lot of space before it goes to the 70. And also, if on the Monday opening the price fluctuates a bit up and down again, it can drop lower before a potential breakout. Monitor it, however, if the price starts going up, because if it goes to overbought conditions very quickly, then a reversal again to the downside may happen before the price reaches the target from this pattern. Also, the MACD has both of its lines above the zero line, but if the price starts fluctuating, monitor for potential crosses. This can also be an indication pointing that the movement may be invalidated. Regarding the target, the possible movement to the upside is equivalent to the distance between the neckline and the lowest point in the head. So, measuring this from the breakout, which was first over here, this gives us a target around this level over here, which is 0.5833. For our final setup, we're going to observe the GBP/JPY. You can notice that the price has been moving in a general uptrend. Market structure confirms that. Starting from this level over here, we have an upswing making a major high, a drop making a major low, and another increase making a new major high. Having that said, in those circumstances, we can look for situations that indicate a possibility for an increase. You can notice how the price started dropping. Over here it made a low point, went up, and then it dropped down again. Now at this stage over here we are not having any specific reversal indication, but what you can look for is a potential double bottom. Recently the price has made some double bottoms which led to increases. You can see that over here it made one drop, another drop, double bottom, and went up. Over here as it was going up it corrected, one low, another low, a double bottom, and again it went up. So there is a possibility that on Monday after the market opens the price can start moving up and form a double bottom which can indicate a further increase in the price. For this double bottom to be valid you need a couple of things. First, you need the price to start moving up from here. If the price goes down below those levels, let's say below the 0.618 Fibonacci level, then this can invalidate the double bottom. If however it stays in this region and starts going up, then it can form it. As we stretch a Fibonacci from this major low to this major high, you can notice that the price retraced in the golden zone of Fibonacci. It bounced up once and now it's testing it again. A rebound from here gives an extra confluence. The blue line that you see going across the chart is a 100 period simple moving average. You can notice that the price bounced up from it over here. Over here on this first test it bounced up, and right now it's a bit below it, but depending on how the market opens it can still rebound from it to the upside. Another confluence. The blue range that you see over here is a strong and important support range that was formed a while back from those high points right over here. You can notice that the price aligned with this range on those drops right over here. Again, depending on whether the price bounces up from this level or manages to break below it, can be a very good indication on whether this pattern is going to be fulfilled or invalidated. Finally, if the price starts going up, you can also look at the MACD. We had a couple of crosses over here because of the volatility, but if the price starts going up, monitor for one more cross where the red line is going to fall below the blue line, and look for both lines going above the zero line to indicate bullish continuation. Two more things on which I want to update you very quickly. First one is the gold. In the analysis that we shared about a couple of weeks ago, we gave multiple different indications that the price can go heavily up. You can notice that since we started sharing those analyses, which was around 1,945, the price went up with about $130 since then. Now I'm showing you this to remind you of the December rally of which we spoke about, and also of the possibility of a bigger bullish movement in the gold. But at this stage I want to point out something very important, technical and fundamental. Regarding the technical side, you can notice that the price over here again is aligning with the previous times it touched the all-time high levels. It's in the region right over here. And on the XAU-USD, the highest point is just a bit above 2080. It's very important what is going to happen in this region, because if the price finally manages to break above this level effectively, this can unlock the doors for a significant further increase in the price. Fundamentally, you need to know why this strong increase happened right over here on Friday before the market closed. This was a $40 increase in the price. And the reason why it happened is because the tension in Israel again escalated and there was new military activity. For those of you that don't know, gold is reacting very bullish to uncertainty around the world. A military conflict is a huge example of such an uncertainty. Have in mind that this military activity has escalated further over the weekend, and it is possible for the gold to open with a substantial movement to the upside on Monday, possibly even surpass the 2100 mark. Finally, a quick update on the Bitcoin. So you can probably remember a couple of weeks ago where we were discussing the price fluctuating within this range. Well, the price managed to break above it, and as we anticipated, this led to a further significant increase. The price reached a level of a bit over 39,700, where we were discussing that the next possible resistance range that it can encounter is in the range between 40 and 42,000.